Hello and welcome. You're watching Closing Trades on ET now. I am Shah and well, we're going to be tracking the last lap of today's trading session. Let's take a look at where the Nifty is at right now. 25,478. Yes, a mild recovery from the day's low coming in almost at the day's high right now. But we still continue to be 0.1% lower in a trade. So yes, the recovery has been stellar, but we're under the 25,500 mark that we had managed to breach a few minutes ago. For Sensex, 0.2% cut coming in. India VIX in control levels right now, about a 1% spike over there. Nifty Bank, now once again there is some renewed optimism over here because a 0.5% uptick is what we're seeing on Nifty Bank, outperforming the breadth of the market. And talking about the breadth of the market, it's quite even, Stephen, with only slightly, the tilt is slightly towards the declines. Other than that, the advanced decline ratio looks rather even right now. It's Adani Enterprises, Shriram Finance, Bajaj Finance, Tata Steel and HDFC Life that continue to inch up solid gains on the Nifty. On the flip side, that Bharti Airtel block deal that we were talking about has put immense pressure on the stock. More than 4% cut on that one today. Tata Consumer, Apollo Hospitals, Tech Mahindra, Wipro, TCS, HCL Trend before its earnings is 1% lower. So all of these are the stocks that are not doing well at all. But if you take a look at how the sectoral mix has evolved throughout the course of the trading day, when we started, only the pharma index was slightly in green. But that has taken a complete reversal because the pharma index is about 0.5% lower. But what has emerged to be the top winner today is Nifty Metal, a 1.5% uptick over there. Hindustan Copper, Nalco. Of course, we have numbers from Hindalco wherein the PAT is a slight beat, but the revenue is a slight miss. And of course, they've reported that one-time loss as well. But other than that, Hindalco holding up pretty solidly, 0.6% uptick over there as well. PSU banks continue to shine bright as well. Bank of Maharashtra, Bank of India, PSB, Central Bank, all of them doing pretty well. You have Nifty Bank and Nifty Auto that are in the green as well. From the auto space, M&M, Eicher, TVS, they're holding in the green. On the flip side, you have Realty, Pharma, FMCG and IT. IT being the top laggard today. Tech Mahindra, LTI Mindtree, Wipro, Coforge, all seeing cuts between 1 and 2%. So this is the texture of the market right now. Let's try and get in a better sense of where we're headed for the week to come. And Kunal, your reading on the Nifty today, well, yes, the recovery has been stellar from the day's low, but we still continue to be in the red and still sub that 25,500 mark.
Yeah, so the pressure largely remains on the indices, and look at it this way, that after a 250-point recovery for the index Nifty on the intraday basis, and then almost an 850-point recovery for the bank Nifty for the intraday lows, the advanced decline ratio is still flattish to slight negative. So it tells you that the initial impact of the markets, selling off or opening with a downtick, I think that impact has still been persisted by the overall market. Right now, I think we are getting back into a zone of neutral, for the index futures, because I think we've ebbed off almost 150 to 200 points on the bank Nifty from the intraday highs and close to 200 odd points on the Nifty from the intraday highs. So that tells you that we are looking at a point where maybe at 25,450, 500 levels on the spot basis, the Nifty would consolidate. Today, we are seeing very good recovery across few themes. For example, the PSU banking names which have been doing fairly well for themselves. That's a space which you've seen good recovery. There have been individual stocks like L&T Finance, AB Capital, Bajaj Finance, etc. I think these stocks, the entire NBFC pocket has done reasonably well. So that's where I would believe that there could be an additional bout of momentum. But all in all, I think it still seems to be that the markets are trying to get back into some bit of recovery. We'll see over the next couple of days whether the index has the metal to break past about the first major swing resistance, which is at 25,700.
Kunal, even in the bank Nifty, as you said, over 600-point jump from day's low. That's a big jump, and that's primarily led by private banks, actually, ICICI Bank and others, which is there. Do you see some kind of short covering coming in this? Because of we have seen some kind of pressure which was there building up on private banks for the last couple of weeks.
Maybe not on an individual stock basis over here, but yeah, I think on the larger sector front or the index on the bank Nifty, yes, there seems to be a spate of short covering which could have come by. The recovery in ICICI Bank and HDFC Bank, which was there, so you can break the markets into two phases or 2 or 3 phases. The initial first half an hour or maybe a 45 minutes odd, where the markets had a very knee-jerk impact on the downside. You saw a gap down. That was the first part where the market saw some bit of rough selling in terms of positions on the stock future side. Then the second half is where the recovery started off with ICICI Bank and HDFC Bank, which start to show signs that maybe there could be stability which could come back. But in the third phase of the market. Once the market got back into a stable territory, ICICI Bank and HDFC Bank have actually done flat, and the rest of the other banking names, the PSU banking stocks, they've managed to move up a couple of notches higher. So that tells you that maybe the initial impact was just about settle into a trading range using the likes of mild short covering, I would say, for the likes of ICICI Bank and HDFC Bank. But broadly, I would believe that the onus or the trend in terms of the bank Nifty relies more towards the PSU banking names.
Okay, so that's the take on this entire banking space. But let's talk about a stock that's under pressure on the back of its earnings, and that's Refex Industries. A 3% cut coming in on the stock, wherein you've seen revenue that's down 1%. On the flip side, net profit is up a healthy 55%, but the street is not liking that number too much because you have Refex that's lower by about 3.1%. Let's understand what's the road ahead for the company. We have Mr. Dinesh Agarwal, the whole-time director and CFO at Refex Industries, joining us. Mr. Agarwal, hi, good afternoon, and thanks for your time. Let's start by talking about your order book first. Of the 1,200 odd crore rupee order book that you have, what portion is expected to convert to revenue in this year and the next financial year?
So order book, which we told during our earning calls also, it is around 1,200 crore. And complete 1,200 crore, close to 1,000 crore will convert into revenue in this financial year itself.
Yeah, so also if you can give us an understanding of how do you plan to reach the target of 105,000 to 110,000 metric tons of daily ash handling capacity over the next 3 years? What kind of incremental investment or fleet expansion will you require?
There will not be much because we work on a hybrid model where we keep our fleet size, own fleet size is between 10 to 15%, and we do a attach, which we hire from market around 85% to 90%. There won't be much capex. Capex will be around, anywhere be around rupees 30 to 50 crore. 30 to 50 crore will be the capex amount.
Okay, so that's the capex amount that you're eyeing. But regarding the wind energy business, what portion of the 1,225 crore in terms of orders do you expect to execute in FY26 versus what will be the spillover in FY27?
Close to 50-55% will get executed. That is the commitment also to the customer in the current financial year. And the following, first half year, the balance will get executed.
Sir, if you can also give us an understanding of how do margins in the turbine business compare with those in the core ash and coal handling operations?
Wind turbine business is a pure product business where we are currently doing the assembly and selling of it. We are competitive in terms of pricing to our competitor. We expect a good margin. Where wind always will have a high value business. A margin will be like any other competitor. Will have a good margin there.
Okay, and Mr. Agarwal, is the 6 to 7 month timeline for the demerger and listing of Refex Mobility Limited still on track, and which regulatory milestones have been completed so far?
No, as of now, the first milestone, we expect the approval in 1 week time. That is the BSE and NSE, where all the queries from the exchange, both the exchange has been addressed. That is the first milestone before we file the application with NCLT. We are ready with our all applications, documentations for filing with the NCLT. Once we receive from the BSE and NSE, we'll file within 2 to 3 days to the NCLT. And NCLT process normally, what we understand, takes anywhere between 4 to 7 months time. That is the timeline we expect.
Sir, after the demerger, do you foresee Reflex Mobility pursuing its own fundraising or bringing in a strategic investor to accelerate growth?
That is the idea behind, because there is two set of different investor. Coal and ash handling business, where the Refex industry is currently into. the kind of investor who will look into this business and the kind of investor who will look into the Refex Mobility Limited will be a two different kind of investors and two different class of investors. And we have to go for a fundraising there, and there will be a different set of investors working along with us.
Okay, Mr. Agarwal, appreciate you joining us and thanks for sharing that outlook going ahead as well. So that was the management of Refex Industries. That stock under slight pressure, a 3% cut on that stock today. But on that note, we'll slip into a very short break and talk more about where we are tracking the markets to head in the last 1 hour as well as for the week to come on the other side.
Welcome back to the closing trades. We have now joining us Deven Choksey. Deven, how do you see this market? Is pretty flat from an index point of view, but there's individual stocks which are buzzing, and especially in the last 1 hour, we have seen private sector banks, giving a rebound for the market.
Hi, good afternoon. Well, I think selectively the market is supposed to will move because coming from the result season, I believe that I think most of the companies, including the banking sector that you have mentioned, are definitely confirming that their second half of the financial year is definitely working out better for them compared to first and second quarter. Second quarter definitely remained better compared to first quarter, but the second half of the financial year remains very promising. Few reasons on the banking side, particularly the liability side, I think is coming. The cost is under control. That means that it's a lower cost of funds. I think they would be getting it and enjoying. On the other side, I think they are getting the larger amount of traction in form of MSME and SME loans, which was probably not the scenario in the first 2 quarters. Definitely the retail loan segment, I think, is continuing to do well for the likes of ICICI and Bajaj Finance kind of companies. I think they certainly work out very well. So in my viewpoint, I think all summing up together, most of the banks are today available at a valuation which is not expensive, given the kind of 15% kind of underlying growth promise that we carry in those companies. So I think that's the reason for which I think this could be the sectorial rotation also which is happening currently, and this could be the reason for which I think you are seeing the traction into the banking stocks currently. But I see it a distinct possibility. I think across the sector, selective stocks are likely to gain the traction in coming days, as I see it from now on.
Space, it has outperformed private sector banks in the last 1 month, and given good returns compared to them. Do you see further run up or steam left there?
So from a valuation perspective, yes, I think they are undervalued. On a business case basis, I think it is basically being the tailwind is largely coming in from the government's intention to consolidate some of the public sector banks further. Having done one round of consolidation in the first phase, that is 2019 around, I think the second round of consolidation is likely to happen now in this particular period, 25-26. So maybe I think that is one of the reasons for which I think this is driving the stock price as well, given the valuation. At the same time, I think government's intention to bring in the foreign investment is also basically going well, because I think those investors would come with money back. Probably, I think the business conditions could possibly be seen much better by them and execution thereafter. So we are relatively more confident about the possibilities at this point of time. Fundamentals not bad, but at the same time, I think given these possibilities, they could possibly perform better in incoming days as well.
Almost at the end of the second quarter earnings season, on the whole, how do you see the entire earnings season, how it panned out? We began the earnings season on a very muted and a cautious note.
Yes, I think a couple of key takeaways in general. On one side, the cost factor has remained on a controlled downside. Most of the companies have reported better profitability than anticipated, including the large caps and among the mid caps as well. So I think the profitability factor has played a major role because of the cost has remained under control. Second part, interest cost also has remained under control, and as a result of which, I think it is not showing up in the balance sheet even after the EBITDA level. So that way, I think the companies have reported better numbers. On the top line front, majority of the companies have remained promising for the second half of the financial year, though I think the first half of the financial year has had their own problems in form of, I think, some part of the businesses. But I believe that, I think, given the kind of direction that we have received from majority of the companies, we see distinct possibility of successive growth in third and fourth quarter in the revenue top line as well. So along with the growth in the top line, with the control expenditure and better profitability, we see finally financial year 26 ending on a better note compared to previous years.
So that sounds optimistic. And you know, while we were talking about PSU banks earlier, exclusive sources tell ET now that PSU banks' fundraising momentum is set to accelerate next week. Deepam will kick off roadshows to fast-track minority stake dilution in 5 state-run banks. And Prakash Priyadashi, my colleague, is joining us with all of those exclusive details. Prakash.
Well, that's an important development coming in as PSP's fundraising exercise is likely to gain momentum from next week. In fact, we're given to understand that Deepam will initiate roadshows to expedite government's minority stake sale in 5 PSPs. Sources indicate that Deepam's secretary is likely to participate in Bank of Maharashtra's investor roadshow starting next week. A very significant development coming in. You are aware that the government has already approved fundraising plans of 5 PSPs via QIP and OFS tools, which is essential to meet SEBI's minimum public shareholding norms. And therefore, process has been initiated. In fact, boards of these PSBs have already approved fundraising plans in tranches. Along with that, sources also indicate that the Deepam secretary will also hold meetings with merchant bankers and legal advisors and seek their advice on increasing foreign investments in public sector banks. In fact, routes for fundraising exercise will be finalized following investor meetings. So very crucial development coming in. In fact, government had planned up rupees 45,000 crore fundraise by PSB in FY26, and of this, rupees 25,000 crore has already been raised by SBI through a QIP.
Thanks, Prakash, for that. Deven, so now the PSU banks are also getting into the entire fundraising mode. Do you see there's enough appetite for that kind of a paper?
Oh, certainly, yes. I think on the one side, the valuations are giving comfort. On the other side, as I explained, the tailwind is very, very strong for consolidation. And at the same time, government raising money for capitalizing those companies. I think that is an important part as well. So all in all put together, I think if one has to take some position with a relatively low downside risk, I think that the PSBs are right in the checkbox list.
Right, okay, so that's the day coming in. Kunal, let's talk about the top Nifty 50, Nifty 500 gainer today. That's L&T Finance, up about 9.5% to 10% on the back of their investor day takeaways, wherein they've launched their Cyclops AI. They've spoken more about it rather, and they've also said that they plan to launch their Lakshya 2031 goals very soon. So seems very structured, and the street is taking that positively. Kunal, now on the technicals, I understand L&T Finance is a stock that you have been positive on for quite some time. Any re-rating or any rather price revision to the upside now that the stock has already run up so much today?
Historically, we've seen very less times that L&T Finance as a stock has done phenomenally well for 4 quarters on a trot. In the last 4 quarters, the stock has moved from 125-30 levels to now almost 300 plus. Now looking at this kind of a sea change in terms of the price pattern for L&T Finance, we could probably expect the stock. So my earlier targets were closer to 300 to 325 range for L&T Finance. Now I believe after such kind of a very steep last 4 quarter uptrend, you could be looking at this stock entering into a major multi-year breakout. And I think in that sense, wouldn't be surprised that the stock provides potentially another 30 to 40% return over the next 18 to 24 months. So maybe closer to 400 to 425 could be the next target range for L&T Finance after such kind of a strong breakout. The volumes today are one of the highest volumes the stock has shown. So that tells you that even at current levels of 275, 300, where the stock was moving throughout the day, there are a lot of buyers and fresh buyers who are ready to or willing to take risk on the stock at current levels.
Okay, looking good, and that stock is at an all-time high as well. 302 thereabouts is where the stock is right now. On that note, Deven, we'll let you go. Thanks so much for your time, and always good chatting with you. And viewers, time to slip into a very short break, and when we return, we'll track the last 1 hour of the market. So you stay tuned, and we'll be right. The Piramal Finance listed at a premium of 12% as compared to the discovery price after its merger with Piramal Enterprises. Piramal Enterprises shares had ceased trading on stock exchanges since September 23rd. Anjali Palot caught up with the management to discuss their growth roadmap. Listen to a slice of that chat.
You will continue to see us invest in affordable housing, used car financing, microfinance, some unsecured lending businesses like business loans, personal loans, etc. You will also see us invest in real estate development finance and in mid-market lending on corporate lending side. And also you will see us invest in some new businesses, areas that we are not in. In particular, we have spoken about our desire to be in the gold loans business.
Right.
So that those are some of the areas you should see us grow.
And with this, where can we see the AUM going in the next 3 years, 5 years? What's the timeline?
So we ended March at about 75 or 80,000 crores, and we had said at that time that we want to be 1.5 lakh crores by March 28, and I think we are well on track for that. We are at about little over 90,000 crores now. I'm confident that we will cross the 1 lakh crore mark over the next 5-6 months. So by the time this financial year ends, we should be well past 1 lakh crores. And then another 50% over the next 2 years. We have guided for a growth of 25% this year. And we are well on track for that. And if things go right, you should see something similar in the coming 2 years as well.
And with this growth, what kind of margins can we expect coming from Piramal Finance for this year and the next 3-5 years?
See, right now our core business is delivering a profitability of about 1.6%, and we have guided that we want to take it close to 3% over the next few years, and a lot of that is coming from operational efficiencies and reduction in OPEX. So that's going to be the main driver of what improves the profit margins even further from where we are. The second bit is going to be fees, where we believe another 30-40 basis points of increase over the next few years is likely. And finally, there is interest margin, where RBI has, of course, reduced rates over the course of this year, this calendar year, but not a lot of that has been passed through as bank MCLR reductions yet, which we believe will happen in the next few months. And as that happens, we as borrowers, NBFCs, will see that as a reduction in cost of funds, and that will flow a little bit into margins as well. So for all these reasons, you should expect margins to go up as well. So margins, fees, and OPEX are all going to improve, but most importantly, it's going to be OPEX driven, and that's going to lead the path from 1.6 where we are to close to 3%.
Close to 3%. And you've spoken about, expanding further in the unsecured segment as well. There have been certain concerns about, the kind of collection efficiencies that we've seen in the past few quarters in the unsecured lending. Are some of those risks that you've identified, and how do you plan on tackling them?
It's unsecured business is always going to be baseline higher risk, but also a little bit higher volatility than some of the more stable secured lending businesses. That's what you got to price in, and you got to make sure that your pricing strategy and your risk management strategies work with the assumption that there will be some ups and downs in this. Last year was a down year. Last year risk was up in this segment, and so profitability was down for everybody. But this calendar year has been better. So starting about January, February or so, numbers have improved a little bit. It is still not great. It's not at what we want to be for a business like this, but it's a much more acceptable level of risk that we are seeing now than we saw about a year ago. And these businesses, you will accelerate them when times are good, and you will put brakes on them when the times are bad. Last year was a time to put on brakes. Right now, I would say the business is in neutral gear, but at some point of time, you will start getting into higher gears as well.
Okay, that's the word coming in from the management of Piramal Finance. Let's once again pivot to the market and take a look at the technical setup of some of the stocks today, some earnings candidates, and let's talk about Hindalco in today's trade. Mixed set of numbers coming in, revenue slightly better than estimates, but PAT slightly better than estimates, but revenue slight miss. They've also seen that one-time loss of 182 crore rupees. We have Rajesh Palvia, Head Technical and Derivative Research at Axis Securities, joining us. Rajesh, hi, good afternoon, and good to be chatting with you. It's been a while. Give us your reading on Hindalco, and where do you think the stock could head given the kind of steep cut we had seen yesterday? Does it make the stock attractive now?
Good afternoon, Sneh. So, looking at the near-term structure, there was some profit taking in Hindalco, and looking at the current state of structure, stock is almost trading near to its immediate support area on the 50-day moving average, which is placed at around 780, 775 zone. So after this decline, if it's able to defend this 780 zone, some pullback action can be there in this counter, as long-term structure for this stock is still in the bullish trajectory. Near-term structure is suggesting some profit taking or maybe brief consolidation we could witness in near term. So 775 to 810 would be the range for near-term perspective. Either side breakout or breakdown will decide the major course of action for this counter. But as long-term structures are bullish, so still I think those who are already on the long side of trade can hold the position with stop loss of 775.
Okay, so that's on Hindalco, and that's a stock that's in focus on the back of its earnings today. Let's just pull up the chart of Hindalco and see what that stock is up to as we speak. And about, yes, it's right where it was, in fact, the last time we saw it, 0.6% uptick coming in on Hindalco as well. Some other earnings to address in the last 1 hour or so. We've had numbers coming in from Shyam Metallics, wherein their PAT is up by 21% on a year-on-year basis. There's been margin expansion too. That stock should be doing well. Yes, that stock is up 3%. Kunal, do you track this stock, Shyam Metallics? It's a good move coming in today.
Don't track the stock, but yeah, I think looking at the near-term charts, it looks like that the stock has finally found its bottom around 840 levels. Recently, also the stock corrected from 1,000 odd mark. I think the last 3 weeks or 4 weeks from 980,000 was the recent high for Shyam Metallics, and from there the stock had corrected towards 840. And generally, we've seen that with markets doing like what they've done today, and stocks finding good bounces from their critical support points on the back of higher volumes, makes a case that these stocks would probably have found a near-term bottom for themselves. So I don't track the stock very closely, but yeah, looking at the charts in the last couple of days and the last 2-3 weeks of price correction for the stock, seems to be 840 is a good support the stock has found, and we could be looking at the stock gradually moving towards 900 to 920 range.
We're seeing strong volumes coming in the mid-cap space. If you look at some of the stocks, Interarch Building, it's up nearly 14.5%. Good volumes as well. If you look at 30 compared to 30-day average, it's nearly 40 times 30-day average volumes. You have Pre-Call, which is up 10%. L&T Finance again, it's at a 10% circuit, which is there. Tangamile is one stock, Kunal, which you've been talking about, that it's gone up by nearly 30-40% in the last few days, right?
Yeah, 50% this week itself for Thangamile.
Yeah.
And
There
the
was a
stock is
20% upper circuit, which was followed by a 17% move
Correct.
the next day. So very good set of numbers coming in, and that is what led to that reaction on the stock.
And this generally tells you that when markets are surprised positively, they are okay to buy it at premium also for stocks. So, after 20% upside, so I'm assuming that this was in the back of results, for the stock price action. After 20% uptake, we sometimes feel that maybe the stock is a little overbought. And, but if it's backed by strong numbers, etc., in this case, then markets are okay to buy this at premium also. And that's why short-term traders or even investors, they generally get rewarded into such stocks.
But is that the case with BSE also today? Because overvaluation concerns have been there with BSE Limited stock also. And if you pull up the chart, yeah, it's a 9% uptick.
Yeah, it's a breakout of sorts now for BSE. There was this 30% correction for BSE in 2025. Now look at it after this 10-15% rise, it's almost forgotten now for BSE. So from 3,000 levels, I think if I'm not wrong, the stock corrected towards 2,000 odd mark in mid part of 2025. And from there, 2,000 levels, the stock is back again to 2,600 levels currently. So I think it's been a phenomenal uptrend. And this looks like that this could be a comeback rally for BSE.
Rajesh, what are the levels that you're spotting on BSE on the charts?
I think the way stock managed to be breakout over 2,500, I think if it continues to trade above these level, next target would be around 2,800 to 2,850. Very strong buying action. Even if we look at the all other capital market related companies, all stocks are showing sign of buying interest in last couple of days. So BSE is outperforming. We believe that one can hold on the position even in the minor decline. Also, one can add the position. At this juncture, 2,500 needs to keep as a stop loss for upside target of 2,850.
Do you also look at Swan Energy as well, Rajesh?
You mean Swan Corporation or energy?
Yeah, I think the new name is Swan Energy, I think. Swan
Okay.
Corp. Yeah.
Yeah, Swan Corp. So stock is still in consolidation range only. If we analyze last 4-5 month the price behavior, still stock not able to give breakout above 485 490 zone, which is very important and crucial for the stock. If at all stock crosses above 490 zone, then yes, there would be a breakout on the monthly as well as on the weekly chart, and then possible extension of rally towards 530, 540 we may see in the near term to short term perspective. But looking at this price behavior, we believe that those who can give some time, like 2 to 3 month kind of time horizon is there, then one can buy and accumulate. As looking at near term structure, we believe that stock is poised for giving breakout of this consolidation. So at this juncture, 462 needs to keep as a stop loss to buy and accumulate. On the breakout of 490, one can add more position for upside target at 540.
Do you have any view on Amber as well? Amber Enterprises stock down nearly 8.5% on the back of disappointing numbers.
Yeah, so stock corrected sharply post this number. Stock is now slipped below to 20-day, 50-day moving average. Near-term trend has turned on the weaker side. Looking at the long-term structure, still stock is trading above to long-term support area, which is almost placed at around 7,000, 6,950 kind of zone. So those who are looking for a little longer period horizon, so one can utilize this decline as a buying opportunity. On the downside, 6950 needs to keep as a stop loss now. And I think if it's not breaks below 6950, some pullback action cannot be ruled out, as long-term structure is still bullish on the even in this today's decline. Also, some buying interest was there at lower level. So maybe in pullback 7400, 7500 we may see in the near term perspective. So buy with the stop loss of 6950 would be the advice.
So that's the take on Amber Enterprises. That stock under steep pressure, an 8% cut over there. But on that note, we'll slip into a very short break and talk about some more buzzers in trade on the other side. Closing trades and the recovery that we're seeing on the Nifty from day's low continues. We're now above that 25,500 mark, very, very mildly in the red anymore. So that recovery that we've seen of about 180 odd points from the day's low is looking very good. But let's shift focus and talking exclusively to ET now. IREDA chairman says that S&P rating update will help the company raise offshore borrowings while also sharing plans on renewable energy projects. Listen into what he had to say.
We are thankful to S&P, which they have upgraded the rating and brought at par with the sovereign now. Certainly, this will enable us to explore more overseas lending, borrowing. Because if you look at IREDA's history, prior to last 5 years, our majority of the resource composition used to be in overseas currencies. And most of the MDBs and DFIs and others, lenders, they used to prefer to channelize their green financing through IREDA. But we have already started our operation in GIFT City. Hopefully this month end we'll have some sanctions done. So once one or two couple of sanctions we do there, where our object is that we'll borrow in overseas currency and lend in the same overseas currencies as per the requirement of the developer. That is especially to cater to the major players in the field in two sectors. One is this IRE component manufacturing like cell, module, etc. in the solar space. And other one is green hydrogen and its derivatives.
What are your plans for fundraising for the rest of the financial year? Would you be looking at a dollar bond in this financial year by March?
See, whether it will be dollar, JPY or euro or any other currency, that will largely depend on the developer's requirement. Where the developers are setting up a project in India, which will be enabling them the export potentials. So depending on the which currency they are using for their capex and the export potential, if same currency it happens, then ideally we'll prefer for that. So it all depends on them, and most likely now what the talk is going on, either it will be in dollar or JPY.
And what is your disbursal target for this FY?
I think we have already notified that 30 to 35,000 in the range, probably that exact figure. I do not think we have said, but the kind of income and other things what we have committed to MNRE in our MOU targets, that is almost coming out practically equivalent to between 30 to 35,000 crore.
That was the IREDA management talking to us. We have now Varun Goel, Senior Fund Manager Equity, Mirae Asset Investment Managers joining us. Varun, thank you very much for joining us. What do you make of this market? It's been very range bound. I think if you look from a week's point of view, the Nifty is down almost 1%. Banks are something which are pulling down the index this week.
Yeah, good afternoon. Thank you so much for having me on the show. I think broadly the earnings season has been in line or slightly ahead of expectations. I think we are looking at 9 to 10% earnings growth for the broader markets for financial year 26. I think there is clearly an economic uptick that we are seeing. I think thanks to the 3 lakh crores of tax cuts, a significant revival in central government infrastructure spending, and a very supportive and accommodative monetary policy. I think these three things should take the economic growth closer to 7% this year. And we remain quite optimistic about the earning revival. I think after 4 quarters of downgrades, this is the first quarter we are beginning to see earnings getting better. And I think as far as the small and the mid cap space is concerned, the turnaround may be even better there. So broadly, we remain optimistic on the markets.
Okay, and Varun, hi, good afternoon. The euphoria in the Indian market that seems to be simmering off a little bit given the kind of correction we've seen in the last couple of weeks. Amid a market like this, how must investors fine-tune their expectations from the kind of return we can see from the market?
I think if you look at the 30-year average earnings growth for, let's say Nifty 50, that has been more like, 11 odd percent. And if you see the returns that also been more or less on those lines. So while we had a, very good FY19 to FY24, where the average earnings growth was closer to 17-18%, and Nifty 50 delivered 17-18% compounding. It was followed by a cyclical slowdown where we saw almost 2% earnings growth in Nifty 50 last year, and then market returns were almost zero, or you can say flattish. I think starting now, we should start to see a reversal as far as earnings are concerned. So we expect, let's say a 10% kind of earnings growth, and we would expect, that the markets would follow the trend of the last 30 years, meaning that the market returns should be in line with what the earnings growth are.
Okay, and Varun, amid a market like this, let's talk about consumption first. Given the GST boost that we've seen for autos and for the overall consumption pack, what is your take on the sector, and do you believe that a revival could now well be underway for the sector on the back of the GST cut?
Yeah, I think, as far as discretionary consumption is concerned, that will definitely get a boost from the, 1 lakh crores of tax cuts, 2 lakh crores of GST cuts. And then I think the third installment of that will be the 8th pay commission, which is probably still 12 months away. But I think cumulatively, we should see a much better environment for discretionary consumption. We remain optimistic on four-wheelers, two-wheeler companies, air refrigerator, washing machines, air conditioner. These are some of the segments which are very clear and direct beneficiary. I think some travel, tourism, hospitality companies should also benefit from what is clearly a very, very large stimulus.
I mean, if you look at Amber Enterprises, the numbers were looking weak. The stock is also down. How do you look at some of the EMS players?
Yeah, I think EMS as a space should do quite well over a 3 to 5 year perspective. I think government is giving a lot of benefits for those people who are putting up, PCB and PCB related manufacturing factories in India. I think overall the idea is to encourage mobile phone electronic manufacturing in India, and I think we are on the right path. It will take 3 to 5 years before the whole ecosystem gets built up. But broadly, the space should see significant growth. Of course, the challenge here remains the valuation. I think we need to be very, very careful about what companies one is investing in, considering the fact that a lot of growth seems to be already priced in.
Right, OBI Live Studio. Before we moved to the break, we were in conversation with Varun Goel, the Senior Fund Manager at Mirae Assets. Let's keep that conversation going. And Varun, once again, coming back to you, thanks for staying by with us. Give us your sense on the entire metal and real estate space. Two pockets of the market that we have seen outperform when the market was largely underperforming. What kind of value or growth are you seeing when it comes to both of these pockets, metals and real estate?
I think as far as the real estate space is concerned, I think this the sector is still in the mid-cycle. We are seeing significant reduction in mortgage rates, home loan rates, thanks to the significant monetary easing which has played out in the last 1 year. So we would expect the sales momentum to get better. Also, there is a big shift from unorganized to organized in the residential real estate space. and the trend will continue to play out. So even if pan-India basis, we will see low digit kind of a volume growth for the sector as a whole, the organized sector guys will continue to gain market share, and we expect this mid double digit kind of a top line growth and profit growth for most of the tier 1 companies. We remain constructive on the sector as a whole. As far as the metal space is concerned, I think we have seen a very strong price action in the last few months on the expectation of a strong earnings growth. I think globally commodity prices have been inching up, and I think the benefit of that will be available to most domestic manufacturers. I think as far as the steel companies are concerned, that's clearly something that we prefer, considering the fact that we have safeguard duties in India, which will ensure that the profitability of some of the steel companies will remain quite robust. So we're constructive on the metal space at this point of time.
What's your take on some of the auto companies? We're seeing some kind of divergence with respect to the monthly sales coming from two-wheelers and passenger cars.
Yeah, I think the stimulus which has been given will continue to have a big impact on the overall auto sector in the next 6 to 12 months. We remain quite constructive on the four-wheeler space. I think that's the segment which has benefited the most. Also, the tractor segment continues to do quite well. We have seen very strong numbers coming from various participants in the last 1 month, and we believe that should continue. There are some early signs of revival as far as the CV space is concerned, and we believe that as the growth outlook in the country improves, as the capital goods sector does well, even the CV cycle should start seeing an upturn. So broadly, we remain constructive on the sector.
Okay, Kunal, what's your take in some of the metal stocks? I mean, he was bullish on metal stocks. What's your take? Because Hindalco is going to come out with an earnings now. You have Tata Steel and others which are also going to follow.
So the view on the entire sector is very much on the bullish side. It was just that I think Hindalco specifically, the stock went through a correction the last couple of days, more or less, on the anticipation of the results. But I actually believe that we are looking at a potential multi-month, multi-quarter, even a multi-year rally for many of the metal counters. Because when you see such kind of breakouts, Tata Steel, I think last week or so, the stock managed to break past above its previous highs of 184, created a new high of 187, and from there the stock corrected 5% broadly. Now we look at this in terms of percentage points for most of the other metal counters. SAIL, I think from 144, 45 levels odd, has again gone through a 5% correction. JSPL, Hindalco, a little bit more exaggerated than that, 5% correction, say broadly around 8 to 9% correction is what you've seen for Hindalco. So I think when you look at this in the entire pack, it was a 5% retracement for broadly the metal index, and now I think we've settled back into a support for the entire metal sector. So bullish on the entire pack. I strongly believe that dips like this 5% to say broadly 10% dip or a retracement should be taken as a good buying opportunity.
Coming back to the Air India thing, I think we have a reporter, Samir, who has to report some development from the Supreme Court on Air India. Let's hear him out.
The Supreme Court has issued a notice to the Centre, to the Aviation Regulator DGCA, as well as to AAIB, the Aircraft Accident Investigation Bureau, in response to a petition filed by the late Captain Sumit Sabharwal's father. So basically, Prakash Sabharwal, who is the father of late Captain Sumit Sabharwal, as well as FIA, Federation of Indian Pilots, jointly filed a petition in the Supreme Court seeking a court-monitored probe into the ill-fated Air India crash AI-171 that crashed on June 12th and that resulted in the loss of 271 lives. And now Prakash Sabharwal filed a petition, and in the petition Mr. Sabharwal has alleged that it is being portrayed that this accident or the crash is because of his son's error, whereas he indicated that initially it seems that it is the aircraft crashes because of some digital malfunction or some technical glitch, but it is being portrayed that the error is from his son's side. On the entire hearing, Supreme Court made a remark, observed that this is very unfortunate. The crash was unfortunate, but the son or late Captain Sumit Sabharwal can't be blamed for this, and the such portrayal cannot be accepted. But yes, the notice has been issued to the three parties, especially the Aviation Ministry, seeking a response from their side. The next date of hearing in this case is November 10th. In addition to this, the Justice Kant, who was hearing the case, also mentioned that till the hearing from both the sides, from both the parties cannot be heard. The initial probe from a court-monitored or a retired Supreme Court judge appointment cannot be done so. So first, the notice has been served, and now a detailed response will be sought from the central government side.
Okay, so that's the update coming in on that unfortunate Air India crash. Thank you so much for bringing us all of those details, Samir. And yes, all eyes are going to be on the next hearing date of this unfortunate accident. But moving away from that, once again shifting focus to the markets, it's names like Swan Corp, BSE, Blue Jet, Gujarat Mineral, that's JMDC, that's been doing well. And Angel One is a stock that has spruced up nicely on the back of its monthly update, a 5% uptick on Angel One. Rajesh, your take on the charts of Angel One and a good move coming in today. 2610 is where the stock is. Are you spotting any further upside from here?
So in today's session, yes, there is a strong buying action in Angel One, and now looking at the near-term chart, stock managed to view breakout of last 4-5 days consolidation range, and now stock is comfortably holding above to 200-day moving average. Looking at the breakout on the near-term chart, we do believe that yes, if it continues to trade about 2580, possible extension of rally towards 2660, 2680, we may see in the near term. So one can hold the position with stop loss of 2580.
So that's on the Angel One. But Rajesh, if you could share some BTST ideas with our viewers in a market like this, where are you placing your bets?
So again, from NBFC space, Shriram Finance is looking very strong. The way stock managed to give breakout on the weekly chart, multi-month breakout is already there on the long-term chart. Looking at this formation, we believe that Shriram Finance can extend its gain, and we are projecting target of 845 to 850. On the downside, one needs to keep a stop loss towards 808. Another stock where we are focusing is from the agrochemical basket, that is UPL. Again, here we could see a breakout of previous swing high. Looking at this breakout, we believe that now stock has managed to give breakout on the weekly chart. So next target we are projecting towards 775 to 780. So UPL is buy with stop loss of 735.
So that's the take coming in on the chart. So some of the stocks that Rajesh is liking. Rajesh, thanks so much for your time today. On that note, we'll let you go.
Thank you.
Thank you. Okay, let's move away from that and shift focus to an IPO that was listed on the bourses today. Studs Accessories made a flattish listing on the market today, and that stock continues to be under slight pressure, a 4% cut over there. Let's interact with the management. We have Mr. Siddhartha Bhushan Khurana, the MD of the company, joining us on the show. And Mr. Khurana, hi, good afternoon. Help us understand this, since this is a complete offer for sale IPO, how will you fund future expansion or any new capacity plans that you might have?
Currently, we are underway. We are making another manufacturing plant, which will be operational in next quarter, and the revenues will start flowing in from next year onwards for that. And I think in terms of funding the expansion, we'll be doing it mainly with internal accruals. So we have enough cash to do the expansion, current expansion, and maybe some future expansions as well.
You expand span over 70 countries. Which markets or product lines offer the next growth opportunity for you?
I think export looks to be good. It looks to be strong. The order book is strong. The first half year was also good. So the main countries where there is a lot of export potential for us are countries like Colombia, Indonesia, Philippines, Spain. So we're growing, and as I said, the order book is really strong there. And the first half year was also good, so the outlook remains quite positive there.
Okay, it's looking good over there. And if you could help us understand, how fast is the premium SMK brand scaling versus the Studs brand, and what is the margin difference between both of those segments?
So the premium segment is actually growing faster than the mass market segment. So SMK is actually growing faster in terms of percentage, but obviously the base is a little smaller, so the percentage is much higher of growth. And in terms of margins, the margins are much higher than Studs. To put a number, right, it will be close to about 60 to 70% more, or maybe 80% in some of the products. So quite different margin profiles for both the brands.
There's a rising compliance requirement for helmets, and there's also an improving two-wheeler sales. What's the kind of demand trends that you're witnessing in this market?
I think recently with the GST change in motorcycles, we are seeing pick up in motorcycle sales as well and helmet sales as well. So as I said, the order book is pretty strong and the growth outlook is good. I would not like to put a number right now, but what I can say is the future looks bright as of now.
So you sound optimistic over there, but lastly also Mr. Khurana, help us understand, margins have improved steadily. What is a sustainable number on the margins front and how do you plan to offset raw material volatility?
First quarter of this financial year, the margins had further expanded and I think it's more like a steady state right now. Margins had dipped for 2 years in between, which was during COVID years, but they're back to normal now. And going forward, maybe this could be the steady state range. And I think in terms of, as I said, margin profile expansion and raw material volatility is what you talked about. So I don't think raw material is very volatile right now, although it's a lot of raw material is crude derivative, but at the moment the prices are quite low. And we don't expect any significant change in next medium term for the raw material prices.
Okay, Mr. Khurana, on that note, we'll let you go. Once again, congratulations on the listings. That was the management of Studs Accessories joining us on the show. Slightly flat listing for the stock and the stock trading at a 4% cut right now. But Varun, let's come back to you and talk to us about the recent exuberance that we've seen in the primary markets. Is this an indication of good investor appetite, or do you believe that this is just an overheated sentiment right now that needs to cool off?
Well, we have been selective in terms of our participation in the IPO space. I think there are some niche good opportunities, but one really has to pick and choose and keep an eye out on valuations. I think overall, I think this is a year which has seen 70, 80 IPOs, which clearly indicates that the capital raising activity in India has been pretty robust. And we believe there is always scope for bottom-up stock picking in these issues.
Two big IPOs listing next week. I don't know whether you've tracked them, LensKart and Groww. Do you have a view on both of them?
Well, I will not be able to talk about specific names, but broadly, like I said, we are selectively looking at some of the companies.
Okay, and Varun, talk to us about the IT company. You know, when the numbers came in the first part of the earnings season, IT didn't look that bad. In fact, a decent set of numbers that came in from most of these large cap IT companies, and that led some optimism. But once again, all of that seems to have simmered down. Your take on IT, do you believe that it's now time for a turnaround, or is there a little bit more needed on the fundamental front before we can see some kind of positivity in the IT space?
I think as far as the tier one IT companies, the large cap space is concerned, they're trading at a fairly attractive valuation. I think the results were slightly ahead of expectations, and the demand environment is stabilizing, and hopefully it should get better in the next 6 to 12 months. So we remain quite optimistic on that. As far as the mid-cap IT space is concerned, some of the companies there continue to trade at a high valuation. So there we would be a little more cautious. But I think overall, we have seen enough or significant correction in the IT space in general, and it may be time to be more constructive on the IT space from this point onwards.
Okay, so that's the take coming in on the IT space, but let's shift focus once again to earnings and give you a little insight on what we're expecting from Trend's numbers. They should be out any time now. If you take a look at these numbers on a standalone basis, the management, remember in its quarter 2 update, had guided for a revenue figure around 5,002 crore rupees. We were expecting slightly lesser at 4,792 crores. So this number looks good. Let's see if they're actually able to land on that number. EBITDA, we're expecting to see a 22% uptake. PAT, however, not much activity. We're not expecting to see any exuberance over there. Margins, however, are expected to tick up slightly by 40 bips at 16.3% compared to 15.9% on a year-on-year basis. But what really stands out about Trend is the kind of growth momentum it has seen in the previous quarters. Remember, this is a company that has seen a 40% year-on-year momentum. That simmered down to about 39, 28, and now we're expecting to see roughly a 19.5 to 20% growth on the revenue front on a year-on-year basis. So the momentum that we've seen of revenue deceleration, that is going to continue for Trend undoubtedly. So let's see how the street reacts to that. But other than that, decent set of numbers is what we're expecting. We've spoken about Trend on the chart, so let me get Varun's view. Varun, how does something like a big retailer like Trend stack up against a DMart, and then how do both of these traditional companies weigh against some of these quick fashion, quick commerce, quick delivery companies?
Yeah, I think we are seeing a very large disruption as far as the consumption space is concerned. So I think standard items, things which can be ordered through the quick commerce and the e-commerce platform, we are seeing a very large disruption, and therefore one has to align the numbers and the models which are being penciled in. So we would be a little cautious on this space. I think the distribution mode, as far as the staple space is concerned, and some of the discretionary categories also, that is clearly not as important as it used to be a few years back, and therefore one needs to be really careful in terms of what products and categories one is betting on. We would be more positive on travel, tourism, hospitality, as that's more discretionary in nature and more service oriented as far as our consumption plays are concerned.
Okay, and while you're talking about this entire travel and tourism space, in fact, I wanted a better sense from you on that. Numbers from IHCL this time have been subdued, but on the flip side, something like a Chalet has done well. We have Lemon Tree Hotels coming out with numbers next week, and the series or the frequency at which they have been updating the street about new developments has been very positive to look at. Your take on who could be leading the growth in the entire hospitality space? Is it going to be large cap players who've been settled for a while, like your ITC hotels and IHCL, or on the flip side, do you believe it's going to be some of the smaller players?
Well, we remain constructive on the hotel space. I think the cycle continues to hold on quite well. I think the supply is going to be lower than what the demand is going to be, at least for the next 18 to 24 months. And therefore, we expect the room rates to hold firm. So I think both large and mid-cap companies should continue to see strong RevPARs. And I know we are already seeing occupancy continue to be quite well. I think we are entering the holiday season. The Q3 and Q4 are normally bigger quarters for the hotel companies, and we expect a good quarterly numbers from these companies going forward.
How do you look at the healthcare space, especially companies like Apollo and others? We saw a decent set of numbers coming from them.
I think the hospital space continues to be quite attractive. We are again seeing a very large shift from unorganized to organized there. I think with the increasing penetration of health insurance, more and more people are going to be availing the services of organized hospital chains. And as such, we expect next 2 to 3 years should be pretty good, as far as the realizations and occupancies at these hospitals are concerned. So we remain quite constructive on the sector.
Okay, while we're talking about some earnings that we're expecting to see trickling in any time now, Bajaj Auto is the other Nifty company. We've had numbers from Hindalco, Trent anytime now, and so is the case with Bajaj Auto. Shrishti is here with details on what the street is penciling in for this auto major. Shrishti.
So steady set expected by Bajaj Auto this time around, when the margins will be the key to watch out for, where we are expecting a number close to 20.2%, and that could be absolutely flat growth on a YY as well as on a Q1Q basis. While on a Q1Q there could be a marginal improvement, but along with that it's a double-digit growth expected, nearly in the range of 11 to 13% on a YY basis, be it for EBITDA, revenue as well as the profit figure. Now in terms of some of the internals, it was the volumes that have seen a jump of 6% on a YY basis. Sequentially, the volumes did grow by almost 16.5%. Along with that, it's the sales of the three-wheelers that did very well. Export markets did very well, and because of that, the product mix is expected to be quite healthy for Bajaj Auto. So definitely all eyes on Bajaj Auto earnings, and along with that, their commentary on the domestic market outlook. How are they seeing the domestic market growing, especially after that GST rate cut? And along with that, what are their new launch pipeline and what are the plans regarding that? That is something that we will be watching out for.
Kunal, we're ending the week or Friday on a flat note actually. How do you see the Nifty and the Nifty Bank going into Monday trade?
So I think they should go with some sort of an maybe a hope that if there is nothing major which is negative on the global front, there could be a spate of recovery which could happen in the next couple of weeks for the indices, because this week started off on a much negative note for the indices, and then I think last 2 days specifically you're seeing the global markets also going into a correction, so that maybe added some bit of more pressure for the overall market as such. But I think with the recovery which you've seen on an intraday basis, it just about indicates that maybe at 25,400 to 500 range, there seems to be a good enough support for the Nifty, and for the Bank Nifty close to that 57,000 mark, 57,500 as a broad range is where you're seeing good support emerging for the Bank Nifty. So these are two very crucial levels which I believe a short-term trader has to keep an eye on. And today's low, for example, give or take another 50 odd points, from those levels for the indices, remains to be a very critical and a crucial support going into the next week.
And Varun, of course, big events lined up for our markets next week. You have the AMFI and SIP data. The CPI number is going to be out on the 12th, and of course, the Bihar election result will also be out. Varun, now that earnings are largely behind us and we're stepping into just the last week of earnings, what do you think could be the next trigger to have some sort of change in the market or to lead the market upwards from here?
Yeah, I think, as far as the domestic macroeconomic indicators are concerned, they are largely positive. We expect inflation to be very well behaved for this financial year. So we're looking at around 7% real GDP growth, around 2.5% inflation. That should lead to around 9 to 10% kind of a top line growth for most tier 1 corporate India. I think incrementally, of course, we continue to watch out for further acceleration in earnings growth. Like I was saying, the bigger turnaround seems to be in the small cap space. I know last 4 quarters, if you see, the earnings growth was minus 15%. I think the next 4 quarters, we are expecting a complete turnaround with a plus 15% plus kind of earnings growth. So we would believe that the small and the mid cap space also would start delivering much better earnings growth as compared to the last 4 quarters. And that's something that we will continue to watch out for.
Okay, and Kunal, coming to you, we have about a couple of minutes left till we need to start winding down, but quick view on Nykaa. Numbers are due in the evening today, and we're expecting to see a healthy growth this time around. It's a stock that, both of us have been rather bullish on, and we've spoken about this quite a lot of times. Your take on Nykaa?
So I'm very bullish on the stock on the medium to longer term charts. And I, in the sense that, the stock has come back towards a good retracement point. So I think 4 or 5 weeks back, the stock made a fresh 52-week high when it crossed 260, 263 levels. And from there, the stock has cooled off. But then when you look at this, the last 5 weeks of charts, there was this, first week where the stock moved from 225 to 260 levels. And the next subsequent 4 weeks, there has been a very mild retracement for the stock. And it's come back towards the midpoint of this 40 odd point breakout for Nykaa. So closer to 245 is the midpoint, and 225, 265 broadly as the support and resistances respectively. So I think at current levels, the stock has found its near-term support. And I also believe that at current levels, for traders who missed out on the earlier leg, this generally becomes a good retracement buy for a stock like Nykaa.
Okay, so that's on Nykaa. And on that note, Varun, we'd like to thank you for your time today. Thanks so much. About 3 minutes left to market wrap. Before we start winding down, Kunal, quick take on which sector could be the one to watch out for on either side for the week to come.
Of course, I think banks will be the first one to keep an eye on, because the recovery which you've seen for banks today was one of the sole reasons why you saw the market at least showing signs of good recovery.